them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's what I call a Hall of Famer when it comes to commercial real estate investing. In fact, he is a mobile home park investment expert and educator. He's responsible for Park Avenue Partners' strategic direction, acquisitions, and property operations. Prior to founding Park Avenue Partners, he co-founded Park Street Partners, a similar partnership also focused on acquiring mobile home parks nationwide. PSP investments are returning 8 to 12% cash annually to limited partners. Appreciation is expected to increase returns further. Overall, he has a heart for helping people create and preserve more wealth in real estate, and a heart for educating people. He actually had the first mobile home park podcast a number of years ago. Please welcome to the show with me, Jefferson Lilly. Hey, Jefferson, how are you?
I'm great, Brett. Thanks for having me on your show. I'm looking forward to this.
Excellent. Would you give our listeners just a little bit more about your background and current focus? Maybe give us like the 1 minute version, and then we'll dive into the big one question for the day.
Okay, sure. Yeah. So I got into this business about 13 years ago, really just looking to, I'd been working in high tech. I was looking for some stable passive income, and bought my first mobile home park, thinking really originally I was going to buy an apartment. But in researching apartments, discovered kind of by accident mobile home parks and some of the dynamics that I think make them a more compelling asset class. And then it kind of took on a life of its own. After a year or so, I ended up leaving that high-tech startup. Had already bought my first park, bought another, did some consulting. I've now, over about the last 7.5 years, raised right around $34 million from investors to go out and buy still more mobile home parks. So
amazing. And that's one of our
yep.
favorites here at Capital Gains Tax Solutions is mobile home park investing. I think it's one of Warren Buffett's favorites too. We also
Yep.
love senior housing, multifamily, but really not in that order. We typically really like mobile home parks right now and senior housing, and multifamily is just way overpriced, but that's for another episode.
Yes.
In the meantime, Jefferson, we're focused on the one big question. What's your biggest frustration you, a partner, or client has faced when it comes to capital gains tax deferral options? And it could pertain to your syndication deals, it could pertain to 1031 exchanges, whatever comes to mind.
Yeah. So what's frustrating in particular is that the SEC does not allow 1031 money to come into funds. Somehow, even if you own your own mobile home park and sell it, somehow putting your profits into a fund of any sort, including ones such as what we do at Park Avenue that specializes in mobile home parks, that's still not defined as a like-kind exchange. So that's a big frustration. That said, we do try and be very tax friendly for our investors. For tax purposes, we try and lose as much money as possible. And certainly the new Trump tax laws help us with that. We generated last year, our first full year of operation, about 30% losses for our investors. This is purely for tax purposes. We actually paid them out about 4% cash. But with a 30% loss, figure they're maybe roughly at the margin at about a 33% tax incremental tax rate. We probably gave them another 10% in cash back because of the losses we generated that, of course, then the IRS has to refund to them. This year, it's looking like we may well generate even more losses for tax purposes and generate an even better return. Plus, of course, now our cash returns are running a bit higher and more like around 6% for folks in cash plus the loss. So
yeah, beautiful. Yeah, paper loss, right? But still get cash flow. And the key is to bring in the cash, not pay the tax on it. And the government allows depreciation and some accelerated depreciation. And the Trump tax plan was amazing for that. Hopefully that stays around. But now with Biden in, all bets are off. That being said, it's for another episode. By the way, the Deferred Sales Trust is a solution for that. We just closed a couple deals. We did a $7.6 million deal in Georgia for our listeners.
Okay.
We saved the failed 1031. He put the money into the trust, and then he actually invested, the trust can invest into Reg D deals because it's not a 1031. It's just a trust.
Okay.
You know, and so all tax deferred is able to do that, which is a pretty neat thing. That being said, also, if you're selling out of a deal, Jefferson, what are you typically doing? Are you guys 1031ing out, or are you just everyone pays the tax and go on to the next one?
Yeah, we can't because we're sort of a classic GP LP structure. So yeah. So again, it's just not something that's allowed to 1031 out. Unfortunately, we just sort of have to pass through onto everyone's K1s. We pass through those gains.
Yep.
Yeah.
So
So,
again,
but
the
hopefully
deferred
folks
sales
have
yeah.
hopefully folks have reinvested in my next fund, and I generate a lot of losses, and then it's kind of like getting it tax free because they can take the losses on the subsequent acquisitions against the actual profits from my earlier deals. So we
Correct.
try and help investors that way.
That makes perfect sense, but even
Yeah.
a better way, and you're just teeing me up too easy, Jefferson. I can't help but take
Okay.
advantage of it. So we just did two other deals, one in Phoenix and one in Vegas, one 16 million, 120, and the same thing. They do not 1031 in their syndications. These happen to be multifamily properties. So these are clients of mine. Excuse me. And they use the Deferred Sales Trust to defer all of their capital gains tax. Now, the LPs could do it as well, but these LPs are happen to have smaller amounts, and sometimes GPs want to try it out first before they open it up to their LPs. But the point is, you can now park your equity, your gain, and then you can immediately use that to go buy into your next deal, all tax deferred, passive or active. So amazing.
Great.
So if you want to learn more about that, folks, you can go to capitalgainstaxsolutions.com. But in the meantime, Jefferson, if folks want to learn more about investing in mobile home parks with you and your group, I'm assuming accredited investors. And then
Yes.
second, where could they go to find you?
Just come to our website. It's parkavenuepartners.com. Both at the top of the page, there's a handy little button to click to join our mailing list. And honestly, we don't even email once a month. And then down at the bottom of that page, there's also an intake form. Folks can just type in whatever question they have for me and reach me that way. So everything through parkavenuepartners.com.
Perfect. Thanks so much. Look for the full episode to drop here with Jefferson here soon. That's Jefferson Lilly. And we're going to dive into his story, mobile home park investing, and kind of what he's seeing in this economy and why he believes mobile home parks is hands down the best investment class to invest in. Look for that here soon.